Assalamu alaikum, everyone. I hope you are doing well. Today is Wednesday, July 2nd, and we are looking at a green day, another green day, another um, all-time high, basically, for the. Sorry, let me get my chart in order. Uh, for the markets, and the markets have reached a position now that is basically. Um, the most expensive in history, based on a metric that Warren Buffett likes to use. And we will look at what's a good chart to look at right now. Well, I can show you the Bitcoin chart, which I think is quite interesting. You can see that we've been building a base here uh, since the beginning of May. We're now in July. We've been building a base here between 100 and 110,000. And as I say, the bigger the base, the bigger the break. And I am expecting a break, and I'll tell you why in a second. Bitcoin right now, and Bitcoin related proxies really did excellent today. Right now, Bitcoin is just shy of 109,000. Solana is at 152. Doge is right under 17 cents. And a new coin that I'm keeping track of, PIF members know that I'm keeping a track of this coin, Pudgy Penguins, that was up 6% today, is at 0.0155. It has been on quite a tear as of late. So let's talk about why the market is this expensive and what I think is going to happen moving forward. So today we got the jobs numbers, and we basically lost 33,000 jobs in June, whereas the expectation was an increase of close to 100,000. Now, this makes it more clear that, in fact, the economy is slowing down. People are losing their jobs. I think companies are definitely relying on AI a lot more. And certainly when interest rates are high, companies are forced to get more creative and look for technological solutions that can ease some of their employee-related costs. And so we are seeing layoffs. Microsoft is laying off a large number of employees. And I think, as I mentioned, a lot of that has to do with AI and the efficiencies of AI. And if you look at the Warren Buffett indicator and basically compare the market's valuation against GDP, we are basically at the most expensive level ever for the market. Now, this may be a sign for some that, hey, it's time to get out. We're probably going to fall from here. But if you look at this ratio going back to really 2010, this ratio has been in steady increase since then. And so you could have made that same argument basically for around a decade now, more than a decade, that we're getting at elevated levels historically. Perhaps we should expect a pullback. Perhaps the smart money should sit on the sidelines. However, I don't think that's the main driver of markets. I think the main driver of markets is going to be interest rates and whether or not we get a substantial interest rate cut soon. And certainly the language out of the administration suggests that this is what the administration wants. If you look at Scott Bessent, he's all over TV today saying that Jerome Powell is not doing a good job, and obviously he's just parroting what the president has been saying. and that he thinks that Jerome Powell, the Fed, may have tariff derangement syndrome, and that the Fed should start cutting rates sooner rather than later. Certainly, the jobs numbers from today support an argument for cutting rates, but Powell wants to see inflation more under control. That being said, the probabilities for a 50 basis point cut have actually increased today. And that was largely driven by the jobs numbers that I shared. And so we saw risk assets do quite well today, despite, as I mentioned, the high valuation. An additional tailwind for risk assets is the fact that the US dollar has had the worst first half of year since Nixon, really. Since Nixon removed the gold standard that the dollar was on, we haven't had a 6 month stretch as bad as we've had this year. And we've actually depreciated in comparison to the yen, which is notoriously a weak currency. And I think that one of the main reasons for this is the fact that people understand what's going on. People understand that we're going to need to pay. Our debt is increasing. Interest on that debt is increasing exponentially. We're going to need to print a lot of money, and soon. And that money, a lot of it is going to flow towards assets and bid up their prices. And so this is really the reason why I'm not too concerned about the Buffett indicator being at all-time highs, although it's not something to necessarily dismiss. But I think that the more influential factor in the markets today will be money printing. And that money printing is set to increase, not decrease. And that's what's going to keep, I think, the market going from one high to the next. And specifically, in terms of where we are on the calendar, seasonality is quite bullish at this time of year. So stocks have entered the best 2 week period going back to 1928. So if you average out the returns of 2 weeks since 1928, we are now entering the best 2 week period. And so that bodes well for stocks. And if you look specifically for Bitcoin and how it performs in July, actually it typically has a very strong July. Now, if you look at, on average, increasing just below 10%. But if you look at the path that we've been on in 2025 and the tariff scare, the geopolitical scares, wars, everything else, all these negative headlines that the market has had to deal with, that has thrown our schedule off. And I actually think that we may have a better than average July for Bitcoin because there's a lot of catching up to do, a lot of time lost to these geopolitical events and adverse headlines that have kept panic and nervousness in the market higher and kept asset prices lower than what they would have been otherwise. And so there's a lot of catching up that the market has to do. And I think that will start reflecting itself, assuming that we don't get additional adverse headlines. And obviously, there's no way to know that for sure. So I do expect Bitcoin to do well. As I've mentioned before, Bitcoin miners tend to kind of telegraph what Bitcoin is going to do next. And with regards to Bitcoin miners, Bitdeer, one of our favorites, was up more than 15% just today. And so that may be telling us something about what lies ahead for us here. So bullish, in a nutshell, bullish. Salamat Riham, nice to see you. Salamat Osman. Yes, Bitdeer did very well. And Salam Zaki and Salam to everyone. My apologies for going live this late. Inshallah, we'll start going live earlier. It's been a very busy day, but thanks for tuning in. Leave a like if you enjoyed this live and become a PIF member if you aren't a member already. Until next time, make sure to take care of yourself. Assalamu alaikum and peace be upon you all.